Well, ladies and gentlemen, Greg Mikulowski from ForexLive.com. This is a Forex, no, not a Forex, a stock quick look at the Nasdaq index as it rallied sharply today. It's currently up around 443 points or 2.58%. And in the process, we're testing a key technical level. I'll talk about it in this video, so let's get started. When you look at technicals, whether it's stocks or Forex rates, you always look at the past and compare it to some technical levels, and you look at the future and where we may be going and why. And if we look at the past of the Nasdaq index, we came down yesterday to test and actually moved briefly below the low price that we saw in trading last week. That level came in at 17033.96, and you can see a little bit move below that level in trading yesterday, but we closed back above the level. That gave the buyers some hope, and in trading here today, after all the earnings last night and this morning, we did gap to the upside, moved to the upside, sharply to the upside, as a matter of fact. And in the process, we moved up toward this black thin line right here. This line represents the 50-day moving average going back in time. You can see where the market has kind of reacted to that 50-day moving average, either as a support or breaking below that level, or breaking above and using the level as a support to move to the upside. So in trading last week, we fell below that level and then used that 50-day moving average as resistance here, which helped push the price down to the initial low right here. In trading here, we also found early sellers against the level and moved to the downside. So right now we're back up testing that 50-day moving average, and that's going to be key going forward. That level comes in at 17591.73. The current price trades at 17585.5 or 4 at the moment. It's of course moving along, but we're going to need to get above that 91 level 0.73 and stay above that level to increase the bullish bias, not only today but going forward. And of course, we have the FOMC rate decision at 2 p.m. So this level is going to be a key bias defining level for traders through that level. And I'm not surprised that we're finding willing sellers against the level ahead of that key interest rate decision this afternoon, and statement and press conference, because the market just does that. It wants to let the event push the price either to the upside or to the downside, so that's going to be key. On the downside, if we do move lower, getting back below the 38.2% retracement of this last move to the upside would be a target on the downside. The low price today came in at 17,438, above that level at 17,353. So if we do get the market moving back to the downside, moving back into below this 38.2% retracement, we could and should see further downside momentum to the which may take the price back toward our double bottom, or near this double bottom, this near the 17033 level, let's say down to 17000. Conversely, if we do move above the 50-day moving average, that would open the door for further upside momentum, maybe toward the 18,000 level. Let's take a closer look at the hourly chart, see if there's any clues from it. And if we look at the hourly chart, and I'm going to put a Fibonacci retracement from our high price right here to our low price that we saw right here in trading yesterday. You can see, by the way, that the move lower yesterday took the price to 17033 or 17015, I guess, on the downside. Which was below the 17033 level by about 15 points before the market rotated back to the upside. But looking at this chart, you can see that in the short term, we are moving above its 50-hour moving average. Back here, we did find willing sellers against that level, pushing the price out to the downside. So getting above that level is somewhat positive. Here is a 38.2% retracement of this move to the downside. That would be a target to get to and through at 17647.85. So earmark that level as a level to get to and through. By the way, it also happens to correspond roughly with this level right here, which was, by the way, testing the 100-hour moving average when it bounced off of that level, moving to the upside. So this level is going to be a key level for this reason. For the break reason right here, we did find sellers against that, and for the 38.2% retracement. So recognize that level, earmark that level as a level that if we get above, we could see further upside momentum. And then we start to look toward the falling 100-hour moving average and 50% retracement level. those levels are going to be centered right around the 17,843.22 level. You can imagine that 100-hour moving average moving to the downside here toward that level. So that's going to be another key level that traders are going to be looking for on further upside momentum. So I've gone through the downside, gone through the upside, and what you can look forward going into the FOMC. In the Nasdaq index right now, the buyers are making a play. We'll see if they can get above that 50-day moving average and stay above that level and move higher toward the 38.2 on this hourly chart, or the sellers are going to come in and push the price back down. We will see. We will see shortly. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.